What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol CHWY for Chewy Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, we have the 30-minute intraday time frame. First things first, I need to let you know they did give us an earnings announcement after the bell today, so let's flip on the extended hours session and see what's going on with the numbers. So my goodness, before we even zoom in too far, you can clearly see large red-bodied candle and consolidation down here towards the lows. So for the sake of today's video, we will assume that we're opening on a gap up with the open somewhere around 78, 72, and then the overnight low down here around 76, 78. So what we're about to discuss is a framework. These numbers can change by the time 9:30 rolls around, but this is the theory, this is the framework you would use to trade any given gap whenever we're dealing with a gap up or a gap down like in today's scenario. So what we'll do is turn this off, clean that up on the right hand side, shift the focus over to the daily time frame chart, and talk about how we're going to navigate this. The first thing you have to think about whenever you're dealing with a gap down is of course the fact that we can get a gap and trap, meaning we work our way back up to today's low, filling the overhead gap. So that would look like if we open here, fail to take out the overnight low, trade back up through the open, you're looking for a long-sided trade to take us into 86.60. Now, is there anything structurally that's happening in here that could provide a hang-up in terms of moving through this gap? And nothing really is jumping off the page as an obvious area. Maybe this 83.68, but it's so close to kind of being in the middle of the range that I would argue the most important thing to think about would be the 50% retracement of the gap, which is around $82.69. So what we'll do is just throw that on with a regular level just like that and remove our Fibonacci's. So that is the upside level that you would pay attention to first. Maybe reevaluate the long position when and if you get here. Say, are the buyers still strong? Does it look like they could take us home to the gap fill fully, or should I start to trim some of the position? That's what I would ask at 82.69. The flip side of this coin, of course, is the fact that we could get a gap and go, meaning that we open here, consolidate somewhere in this range, never take the open back out, and we break the overnight low, in which case we're looking at a target from our next major area of daily support. So let's go ahead and find that area now. I would start to argue it's right around in here at 73.44 with a bump in the road also here. So just, as soon as I do this, as soon as I have to put more downside levels underneath us, it starts to make the downside trade less attractive, right? Because essentially what we're doing here is saying that, okay, our reward is only to here, and maybe if we're lucky, we get a little bit more reward to here. Whereas with the upside, it's like, okay, our reward is here immediately, and we also have something that could potentially do that. So can you see how there's more upside reward here than downside, given the nature of just the daily structure that we have in place? So again, I'm not saying that it has to be a long-sided trade, but it would be more attractive if it was a long-sided trade as opposed to a short-sided trade here in Chewy. If 73.44 does go, let's say there's a huge momentum move to the downside, the entire market is crashing, what's the next major area that you're going to look out for? I would argue it's splitting the difference of these lows close to about 68. Let's see what that number actually is. So 67.64, off by about, just shy, so 35 cents, give or take. Anyways, that would be the next major structural area that I'm seeing from the daily perspective. Again, do I really think that Chewy's going to put in a daily candle that would look something like this, red to the downside? Not really, but it's not, again, there's maybe like a 0.1 or a 1% chance even of that happening. That would be the structural area that I would watch out for to the downside if the world starts to end here inside of Chewy. So my thoughts, the framework, what my thoughts are in terms of the long versus short trade. I would favor the long-sided trade simply due to the nature of the overhead reward as opposed to the short downside reward that we have in here from both of those areas. So if you enjoyed the video, if you learned anything new, let me know down below in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.